So what I was saying is that the market or price action is a result of human behavior.
Behavior, yes.
Then also, to go furthermore, price action is a collation of fundamental analysis, technical analysis, and sentimental analysis. Now, fundamental analysis has to do with news
About the market.
about the market cappings. Market cappings has to do with market capitalization.
Capitalization.
Understand the volume of that market at that particular time. You understand? People
Yes.
who are participants in it. That's what the market cap is all about. Because when you have a higher market cap, there is everything that the market or that particular pair can withstand some rug pulling, some spike movement, some unprecedented news and all that. Yeah. That's what market capitalization is. So price action is the chart. This chart that you are seeing now. This chart that you are seeing now. You see, it is made up of so many things that comes together to pass out a message. This is a sum total of so many instruments, news coming together to send a message. Now, when you are looking at this chart, you see that some are going up, some are coming down.
Coming down, yes.
Some are going up, some are coming down. Abi? Now, in these components of the market, we have some technical terms, some technical tools that makes up technical analysis. Now, when it comes to technical analysis, you have the market structure.
Okay.
You have the candlestick formation. You have candlestick pattern. Candlestick formation and candlestick pattern, they are not the same.
Okay.
You have chart pattern. Chart pattern and candlestick pattern and candlestick formation is three different things. You have a trend, just like as it is now in our own world now. You understand? The trend of the world now is what everybody now is talking about is
talking about and doing. Okay.
Yes, what people are talking about now is metaverse, online business, online business. So many people are moving to the online space.
Yes.
You understand? So that is the trend. And you know, when you are following that trend, you make money, right?
Yes.
When you follow that trend, you make money back.
Yes.
So when you what about when you don't follow that trend?
You lose out.
You lose out back. So in the market, bringing it to the market, there is what we call trend. T-R-E-N-D.
Indeed.
Trend. And that trend, we have two types. We have two types. After this class now, I'll give you on price action that you will read. Then after reading it, we'll now go into its nitty-gritty, like we'll go into it in depth, where we are going to talk about all these things now that I'm mentioning to you. Right? So
Yes.
we have the two major trends. We have the bullish trend.
The what?
Bullish.
Okay, yeah, I know. Bullish.
Yes, we have the bullish trend.
And the bearish.
Trend is also known as the uptrend. You understand?
Yes.
The market is going up.
Going up.
It means that the market is in the bullish
trend.
Is in a bullish momentum, in a bullish trend. You understand? When the market is going up continually without selling, without going down, the market is in a bullish trend. So in this place now, let us see if we can mark out the trend here. So, example of the trend. See these markets now.
Yes.
See from here, from here now. Did you notice anything there?
Yes. Movement upward.
That place that I marked out, you see the movement upward. How the market respected, it went to this place, bounced out, went to this place, bounced out, and went up. And when it went up, it did not continue. It now broke that structure. Now remember I told you we have market structure. In technical analysis, we have market structure. We have trend. We have also what is called psychological whole numbers. Psychological whole numbers are, here you are seeing this. This is 1.06 thousand. 1.06 thousand, you enter 1.08 thousand. From 1.08 thousand, you see 1.10 thousand. From 1.10 thousand, you see 1.12 thousand, 1.14 thousand, 1.16 thousand, 1.18 thousand. These are psychological whole numbers that the market reacts to. How they came is 1.6 thousand, they just reacted there and they moved. They just touch it, and they moved up.
They move up.
So I was explaining the bullish trend. So we have seen a bullish trend. So let's look at bearish.
Bearish.
You can see the second trend. And the second trend is called what?
Bearish.
bearish trend.
Trend.
A bearish trend. A bearish trend. So the third one, which is not a trend, but a market condition. Now, when it comes to trend, we have bullish trend and bearish trend. But when it comes to market condition, note that word, market condition. When it comes
market is different from market trend.
Is different from market trend.
Okay.
Market trend is 2. Market
yes.
is 3.
Okay.
Did you understand?
Yes.
So market condition is 3 and market trend or trend is 2. We have the bullish trend and the bearish trend. There is no other one. It's just the 2 of them.
Yes.
And now in market condition, we have bullish trend, bearish trend, and range.
Sorry, come again. And what?
Range. You either call it range or you call it consolidation.
Okay. Range as a kind of R-A-N-G-E.
Yes.
Okay.
R-A-N-G-E. You already know what the meaning of the word is, right?
Yes.
Range has to do with a particular zone, a particular timeline, a particular area, a particular environment that is restricted. You understand, right?
Yes.
It is the movement is restricted. That is range. This person is moving between a range. This person is moving, consolidating. This person is within a range. Are you getting me?
Yes.
Nice. So the next one that I'm going to show you is consolidation. So which one now is consolidation? You see this place, right?
Yes.
Did you see that the market is not making any movement outside this box here and outside this place? You see it where, bah? The market is not making any movement above this place. You see, it went, it still came back into the box. It went, it still came back. What did he do here?
Came out here.
Came out small. See here, it bounced up. Here, it bounced up. Here, it bounced down. Then this place, what did it do?
It came down, started going, come up a bit.
Nice.
It
came out. There. It came out and immediately it went inside again. So we can now say that this market condition is consolidating, or this market condition is ranging. You get it back?
Yes, yes.
So how many types of market condition do we have?
3 types.
Which is what?
The bullish trend, the bearish trend, then the range or consolidation.
Right. Then how many types of market trend do we have?
2 types. Bullish trend, like the uptrend, or bearish, the downtrend.
Nice. Nice. So after that, we have the candlestick formations. We have chart pattern. Now, in those chart patterns, we have reversals, we have continuations.
Under chart pattern.
Yes. Under the chart patterns, we have those ones that are continuation. Or trend. You will see chart patterns and candlestick formations in your trend. Did you understand that?
Yes.
Eh?
Yes. So we see candlestick pattern and chart pattern.
Chart pattern. Inside your trend. You have candlestick patterns and chart pattern.
Chart pattern.
So what are the chart patterns that we have? We have head and shoulder. We have double bottom. We have triple bottom. Did you get that?
Yes.
We have double bottom. We have triple bottom. We have
head and shoulder.
Head and shoulder. We also have inverse head and shoulder.
Invert.
Inverse. Inverted. That is head and shoulder that is upside down. You don't understand it?
Yes.
Okay. See our normal head and shoulder now. This is the normal head and shoulder. You can see it back.
Yes.
Then the inverted head and shoulder. You can see it back. So you see that two of them is still head and shoulder, but it's just that this one is inverted head and shoulder.
Inverted.
This one indicates a sell market, while this one indicates what?
Buy market.
A buy market. But you should note that they will not give you this thing, this diagram. They will not give it to you like that. You are the one to use your hand and find it.
And find it.
Yes, you are the one to use your hand and discover it. You are the one to do the assignment. Now, how to? This is one of the ways to know that this is a head and shoulder. It came to this point, rejected it, came here, broke. Now, instead of retesting here and going downward, it did not. It came back here, respected this zone that it have respected. So you have 1, 2. So this your shoulder, head, shoulder. Same thing with this one. You're seeing it, right?
Yes.
So far, do you have any question?
I'm understanding everything.
Okay, cool.
Yeah.
So we also have triple bottom. Now, this triple bottom, the concept behind the triple bottom is the market rejecting a particular place for 3 times.
For 3 times.
He came here, rejected. He came here, rejected. He also came here, rejected.
Yes.
I'm teaching you the chart patterns now. So we also have the triple top. Instead of giving us going up here, coming down, go up, it did not. It came here, rejected. Came here, rejected. Came here again, rejected. And it's down now. So the next thing is for it to go down. In this scenario, what happens? Wait for the market to break this point. Once the market breaks here, you just wait for your retest. You understand, ba? So you are getting the clue now, like you are getting a hang of it, right? All those things making sense to you now, ba?
Yes, yes.
So we've talked about the head and shoulder, we've talked about the triple bottom. Now we have the double top. And we'll have the double bottom. So this is the most used chart pattern that I'm showing to you. This is the most used chart pattern. That is what I'm showing to you now. I hope you are getting it.
Yes.
There are other chart patterns that are in the market, but these ones I showed you now can be spotted. You understand? It can be easily spotted. You can see it without stress majority of the time.
Yes.
These 3 chart patterns. Honestly, if you study these 3 chart patterns and you are consistent with them, you are actually going to make profits. One thing in this market is learning. Another thing is being consistent. So I'm actually teaching you the technical know-how and how you can actually navigate yourself with these chart patterns. Today is just the introduction. We talked about price action. So let me take you to market structure. Now, if the market is going up, you know that the market does not go up straight.
Yes.
It does not go up in one single line, just like that. If it does that, you start suspecting that market.
Yes.
Now, in every bullish market structure, we have the higher lows and higher highs. We have the higher lows and higher highs. Did you get that?
Yes.
We have the higher low and the higher high. All right. So now this is how it is. We have the low. It starts with a low. Now we have a high. Then we now have a high low. So after that high low, what's the next? Higher.
High.
Because this higher high is higher than
the other previous one.
So after having a higher high, the next thing you are expecting is what? A higher low.
Low.
After the higher low, the next thing is what? Higher.
High.
So do you see how we are just moving up gradually by going up and down?
Down.
You see it? You see it? See it? So this can confidently, you see how we have moved from this point. Now we ended at this point. Is that a bullish movement or not?
It's a bullish movement. It is.
Good. So you should note when the market is giving you high, low, and higher high.
No.
When the market is giving you a higher lows and higher highs, the market is in a bullish trend or bullish market. Whenever the market is giving you this structure, higher, low, higher, high, higher, higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high. Because this high is usually higher than the last high. This low usually higher than the last low.
And the last low.
Higher low. And this is called higher high. So when you have such, you know that automatically the market is moving in a bullish what? Market. Market is moving in a bullish market. The market is moving in a bullish trend, or we have a bullish market structure. All these things are just stamps. You understand? So
yes,
when you have that, for the bearish, you have a high, you have a low. You have a higher what? Low.
Low.
Because this high here is higher than this high. So you see is a higher low.
Yes.
Is lower than this high. So after having a higher low, what are you having? A lower
high.
A lower low.
Okay.
Remember,
lower low.
A bearish trend.
You are going bearish. Okay.
So you are having a lower low. After the lower low, you are getting a lower high. After lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So did you see how we've gone from point A to point Z going down?
Yes.
It did not just go down straight. It did not go down straight. It took us process of going up and down, going up and down, going up and down till we got this place where we are. You understood it, right?
Yes.
So you can look at this place now and you are seeing those higher highs and higher lows, but
yes,
on this candle formation. Let's point it out. This is a high. This is a low. This is a higher low. This is a lower low.
Lower low.
Higher low. This is a lower low. Higher low, this is a lower low.
Lower low.
Higher low, this a low,
Lower
lower low.
low.
So did you see that the market did not exactly give you this thing, but you were still getting higher lows
Yes.
and lower lows.
Lower low.
The same thing with bullish. See the bullish. You have a low, you have a high, you have
High.
a higher low,
Low.
you have a higher high,
Higher high.
you have a higher low, you have a higher high, you
Higher
have a
high.
higher low, you have a higher high, you have a higher low, you have a higher high, you have a higher low, you have a higher high. So did you see how the market was still giving you higher lows and higher highs? Why going? These are components of price action. These are components of what? Price action. So we've talked about the trend, we've talked about the chart patterns, market structure. Talked about three main things today: trend, market structure, chart patterns. Trend, chart patterns, and market structure.
Market structure, exactly.
So, do you have any questions so far?
Yeah, but all these movements, I normally hear about 5 minutes, 15 minutes, 1 hour, 4 hours, 1 day, all those things. You can still get them from all these time.
You should know that the market is fractal. The market is fractal, fractional. The market is fractal. What you see on daily, the chart pattern, the market structure, the trend that you see on daily time frame, you can as well see it on the bearish time frame. So you can as well see it on the 1 minute time frame.
1 minute, okay.
What you see on the daily time frame, you can as well see it on the 1 minute time frame. The only difference is that on the daily, it takes days. It takes days to happen. On 1 minute, it takes about 1 minute for it to happen. It takes about 1 minute for it to accumulate. Do you understand?
Okay. Yeah. So those timing are just, it can maybe 5 minutes, it changes every 5 minutes, 1 hour, it changes every 1 hour, something like that.
Yes. After 1 hour, what chart pattern are you looking at? If it have not given you that chart pattern, you wait for another 1 hour. You understand? So on these time frames now, each candlestick takes daily to form. It takes 1 day to open and on the 1 minute, it takes 1 minute to open and close. On the 1 hour, it takes 1 hour for each candle to open and close. The question now is, what are you looking for in the market? What are you planning to gain from the market? You are getting me, right?
Yes.
So that's the question. Are you looking for a bullish triple top? Are you looking for a bullish head and shoulder, inverted head and shoulder? Or you are looking for triple top, a bearish triple top? Or you are looking for head and shoulder?
Head and shoulder.
Head and shoulder, yes. What are you looking for? Now, once you know that thing you are looking for, how many hours, how many minutes is it going to take for it to form? Once it forms, what will you be doing? That's the questions you ask yourself. Do you understand?
Yes.
So, do you have any other question?
So the time in those 5 minutes, 15 minutes, 30 minutes doesn't count. Is there a specific one, or you can just go for anyone?
Look at this. Did you see this 13:59:18? Do you see this time here? 13:59. This is Bitcoin.
Yes.
So the timing of this particular candle here, it will take it for the next 13 hours. 13 hours, 58 minutes for it to close. Reason because it is on the daily time frame. Each candle opens and closes between in 24 hours. That is why it is daily time frame. If you go to 1 hour, it will show you a 1 hour candle. Now, did you see this particular candle is going to close in the next
1 hour.
8 minutes? You are seeing it back? You are seeing it back?
No, which one are you pointing? It's 8 minutes. I'm not. Is it 8 minutes?
Now, see this BTC USDC, it's going to close this particular candle. Now, this candle that is open here.
Yeah.
Close in the next 57 minutes. You are seeing it back?
I'm seeing the candle.
So, example of what we talked about today. What chart pattern is this?
What are you pointing?
What chart pattern is this?
This one, this is the inverse. Is your own is down and bring it up a bit. This is inverse, head and shoulder.
Are you sure?
Yeah. Orange. It's orange now.
Are you sure? That is a double bottom.
Range and cost. Okay, yeah. Sorry, I'm going to the trend. Sorry. Yeah, you're talking about chapter. Sorry, I was looking at the trend.
Did you see it? It's a double bottom. I said chart pattern. I did not say market condition. I said chart.
Yeah, it's double bottom. Yeah. Yes.
So
it's a double bottom.
You say what?
This one now.
Is a double bottom.
Double bottom.
So do you have any other question before we call it a day? It's 1 hour already, sir.
Yeah, it's 1 hour. What I'm trying to understand is, based on those 15 minutes, 1 hour, is there anyone that is best, or normally some people say 4 hours? I don't know. Is there any particular one that someone can stick with, or you just any choice?
You have to stick with the whole time frame. Now, what do I mean? You make your analysis from daily and 4 hours, and you can make it from 1 hour, 30 minutes, and 50 minutes. So you see how you are making utilize of the whole time frame. You see it back? You are making your analysis on daily and 4 hours. Or you are making your entry into the market on 1 hour, 30 minutes, or 15 minutes. So the reason why you are entering a lower time frame is for you to get a discount price. You understand, Ba?
Mm.
So it's not like you are just going to stick on M15. That is 15 minutes, and you just
Yeah.
you will not switch to other time frames. No,
Okay.
you do your analysis from daily and H4.
Mm-hmm.
Then you make your entry
Mm-hmm.
H1, M30, and M15. Any of these 3 time frames, that's where you can make your entry from.
Okay. Okay.
You get it clear, right?
Yes, I guess it now.
Okay, nice. So that will be all for today.
Mm-hmm.
I'm going to send you, chat me up on Telegram so that I can send you this stuff.